Hello again, friends, and hello from the winter wonderland that is Helsinki at the moment. Looking outside my window now, there is like maybe 5 meters of snow. The weather is pretty much different from the last 2 weeks, which I spent in Texas and Louisiana in the United States. A little bit warmer weather there than in Helsinki right now, but doesn't matter. It's nice to have winter also in Helsinki. It's beautiful outside, snow everywhere. In this video, as the year is about to end, I think it's only fitting to show you guys now how I'm preparing myself to go into 2023, the next year. How does my portfolio look now? Most likely this is the portfolio I will start the year with, pretty much. So without further ado, let's dig in, let's see what's in my portfolio right now. So here you can see my full portfolio right now as it stands today, or yesterday when I updated this pie chart. Let's begin with the biggest position, Alibaba Group ADR, 25% of my portfolio, and as you can see, I have added nice little traffic lights there for you, some red, some yellow, some green colors there in the percentages. This is to indicate you how much roughly my position is on the minus side or the plus side, and obviously the red color here with Alibaba, as you all know, the recent 2 years have been rough for Chinese stocks, so I can openly admit that my Alibaba position is a pretty losing one at the moment. Still, the biggest position in my portfolio, still have faith in it, and actually, if you're interested in any stock you're seeing now in this pie chart, I have specific videos of all of them in my channel. So if you have questions, if you want to see more broadly what I have to say about all of these stocks, you will surely find the video from my channel, so go and check it out after this one. So as said, Alibaba, my biggest position, huge moat business from China, my exposure to Chinese economy, the growing Chinese economy, and yep, very much down at the moment, but still have faith in it. So let's see what happens now as China is also easing their lockdowns, and apparently the life is returning to normal in China too. So very bullish on this company still, think it has upside, obviously. That's why it's my biggest position. Next up we have Flow Traders, 18%. This is my hedge against volatility in the market. Clearly there hasn't been too much volatility, quite surprisingly to me, throughout this year. And thus the position is, like Alibaba, a losing one at the moment, but I still feel this Flow Traders is necessary part of my portfolio for the stormy times, and have been trying to learn more about the business all the time. Maybe one of the more difficult ones for me too to understand this financial space, but in regards to Flow Traders, I still have yet to find something I didn't like with the company, with the price it's trading at the moment, so staying in my portfolio there. Then third one, we have Sprott Physical Uranium Trust, 15% of my portfolio at the moment. Kind of neutral, hasn't really gone anywhere since I bought it. This is my vehicle to get exposure to uranium as a commodity. We all, or those ones who have researched uranium, know that in the past there has been a huge spike with the uranium price at the time. Big profits were up for grabs for anyone. Kind of seeing that same thing possibly happening myself in the future. So that this is something I want to have exposure, uranium. Green energy, I think the energy form that can really save the planet for all of us, and many things related to uranium, nuclear power, in my opinion, overblown in the media, in the minds of people. The dangers maybe are overweighted relating to this form of energy. Yeah, Chernobyl and the facilities built a long time ago probably were dangerous to build, but the nuclear power plants we have today built, I have pretty big faith in them that they are built a little bit better, and the risks many people associate with nuclear power are not that rational. Also, as with any commodity, commodity, the price is determined by supply and demand, and still seems that there is a little bit undersupply coming in uranium, and demand is expected to grow in the form of new nuclear power plants being built and the old ones getting longer life than expected at the first. So that is the play. Go check my uranium video. You will learn much more about uranium as a commodity from that video. Then Alphabet, 11%. Well, huge moat company like Alibaba in my opinion. I want to have that in my portfolio. I think it's pretty fairly valued at the market at the moment. I want to have exposure to the let's say best companies of the last 10 years, big tech companies from United States. Difficult to find better investments throughout last 10 years than these big names: Alphabet, Meta Platforms, Facebook. What do you have there? Microsoft, you know, Apple, you know the ones I'm talking about. The big companies. I feel Alphabet search is huge moat business. The cloud business of Alphabet is very valuable and growing. There's so much to like about the company, starting even with the great balance sheet they have, that it's a must-have for me in my portfolio at the moment, let's say so. Moving on, GEO Group, 9% out of my portfolio. And as you can see, the first and only one on the green side after this brutal year for sure for many of us investors. GEO Group is the exception in my portfolio. It's a huge overperformer this year. I can't remember how much my position is up. It's somewhere between 80 and 90% up since I bought it to my portfolio. Still keeping it in my portfolio, though. This is a play on assets GEO Group has. And those ones who didn't know, GEO Group is a private present operator in the United States. Very interesting industry. Go check my video on that and on their competitor coming later, CoreCivic, there in my portfolio. It's an asset valuation play, which I'm kind of bullish still, even though I have seen good profits already with GEO Group, and if I would sell it today, that would be big profits of somewhere around 80%, I guess, at the moment. But as said, still keeping it in my portfolio. I feel there is room to grow even without any short squeezes happening. And it needs to be said, GEO Group has big float of short positions in the market, so there are ideas of short squeezes happening with the GEO Group stock, but that would be then nice bonus to have with this position I have. Moreover, I just feel that their assets are more valuable than the market has been indicating recently, even though the price has been going up now. I think it still has room to go up. Moving on, Intel, 9%. Intel has been pretty brutally hit in the market this year, but still semiconductors is an industry I want to have exposure. Intel is a company leaning heavily towards EU, North America, obviously, where it originates from United States. I feel Intel has a place in EU's, United States, North America's national security infrastructure. The company is important. We also what happened with the chip shortages globally when the pandemic hit, and then it became obvious for everyone how important these chips are that Intel, among many others, are manufacturing. And this is something you want to have manufacturing closer to your own home than on the other side of the world. And pandemic showed us this. So I feel there is a tailwind with Intel due to national security reasons. I would even put it like that. And I also feel that the company is trading pretty cheaply, in my opinion, at the moment. 9% in my portfolio right now. Then some smaller positions. Meta Platforms, 5%. Everybody knows Zuckerberg's big bet with Metaverse. That's something in the years to come, years ahead. How will that turn out? Will it be the best thing ever, or will it be nothing? Still, I have faith in Zuckerberg's vision with Metaverse, but that's not the biggest reason I own Meta Platforms in my portfolio. The biggest reason is that due to hard-hitting meta platforms Facebook has been getting from the investors this year. I think investors have been too harsh on meta platforms, old businesses, namely Facebook, Instagram, WhatsApp, Messenger. I think the old businesses are trading in the fair value at the moment, and metaverse might then be something you get as a big extra. So that kind of risk-reward play with meta platforms was so good that I want to have 5% of my portfolio in it right now. Then moving on, Carriage Services, 4%. Funeral home and cemetery operator in the United States. This is a play on the industry consolidation happening, and kind of how Carriage Services is pretty well positioned to take advantage of that consolidation happening when maybe family-owned businesses that don't have a son or a daughter to continue the family business want to sell their assets, want to sell their companies, and go on retirement, and Carriage Services is there to buy good operators with good outlooks for the future, and this really seems like kind of an advantage the company has at the moment, and I wanted to get in on that. Also reading about the earnings calls of the company, I really like the CEO. He's a big fan of Munger and Buffett, you can say that, with everything he told, at least in the last earnings call, I think, which I read. Really fun guy, I liked him. Yes, Carriage Services 4%. Then finally, CoreCivic, competitor of GEO Group. I wanted to have exposure to both of these private present operators in the United States, kind of just to spread risk. There are little differences between these two, but mainly pretty similar companies. So yeah, that's I wanted to have them both included in my portfolio. I have been an investor now for 5 years. I would say first 3 years kind of a beginner, kind of learning investing, as we all need to do in our beginning of our investment journeys. Last 2 years I have been more professional, in my opinion. My learning curve has gone up, and it luckily is going up all the time for the rest of my life, as I think learning to invest is a process that will take the whole life. You always have things to learn, and I have started my journey of learning 5 years ago. During this time, my portfolio is now up plus 22%. Not much. Let's say if we take into account the great bull run since the global financial crisis the world has been having, what do you have there? Average stocks have returned to you 7% or something like that. Even though average investor is up 2.2%, if I remember correctly, only because, well, some investors do stupid things. But overall, the market has returned to 7% a year, so compared to that, 22% is not much. But when you weigh in that we have been having a brutal year this year, and I'm still up plus 22% in my portfolio, I'm happy with that. And to put things into perspective, you see there are some indices I chose during the same 5 years I have been investing. Obviously, you see Standard & Poor's 500 and Nasdaq with much bigger gains than mine. Well, we all know that last 5 to 10 years even, if you invested in these two indices from United States, well, these indices and the big components in them, Apple, Microsoft, Facebook, and Alphabet, what do you have there? These companies probably have been the best investment one has been able to make during the last 5 to 10 years. Hard to beat those gains. Well, the question then is, will this outperformance by Standard & Poor's 500, Nasdaq, and United States economy as a whole continue for the next 10 years? When you look at my portfolio, you already know my answer. Most likely not. Maybe some good companies there will see a renaissance like Meta and Alphabet, I hope. But overall, even though my portfolio is very heavily in United States stocks, I also have there huge part of my portfolio Alibaba from China, Flow Traders from Europe, even though Flow Traders operating quite internationally, as so is Alibaba, aiming to operate internationally in the future, but mainly still in China. So I have lots of other stuff than stocks from United States also in my portfolio. Then when we look at Euro Stocks 50, so Europe's 50 biggest companies, if you invested in those, you can see that my returns are much, much better than Euro Stocks. Europe has been very bad place to invest during last 5 years, and even more so when you start comparing it to United States. Terrible returns. So I'm compared to that one, my plus 22% seems much better. Then OMXH 25 is 25 biggest companies of Finland in the Helsinki Stock Exchange, plus 27, roughly the same returns, fluctuating there as my portfolio. Someone of you, you know I'm from Finland, and someone of you might ask, why don't you have any Finnish stocks in your portfolio? Well, I have nothing against the companies in Finland. I just haven't found anyone that would, in my opinion, beat these ones I have there now. And on top of that, I would like to say that I know people from Finland who only own Finnish stocks, and it's kind of weird to me since, for example, me, I had my job in Finland, I have my house in Finland, my whole life is in Finland. I am already long Finland in my life. So why would I want my stock portfolio to be also exposed to only Finnish stocks? I think that's a big risk you're taking if you start thinking it like that. Moreover, when we have seen what can happen in Europe, unfortunately sad things with the war in Ukraine, and sad thing for Europe to have such a neighbor as Russia. There is a geographical risk in investing, and this year has probably taught that to many investors. So yeah, I'm not saying that anything bad will happen, but just saying that anything can happen in the world, and geographical risk is something to always think in investing, and this is kind of my way of thinking it. I hope you understand what I mean here. Then finally, just wanted to include ARK Innovation ETF. Who remembers still who Cathie Wood is? Do you remember her? Yeah. The same time, her ETF has made minus 5%. I have made plus 22%, so I'm beating Cathie Wood by a big margin. Only future will tell. Let's see who beats who in 1 year, but this was the darling of retail investors, this ETF, Cathie Wood. When we have had the bull run up with money pumping happening during Corona times, and then the music ended, and this is the end result. I am beating ARK Innovation ETF by a big margin. Let's see what the future holds. I'm comfortable with these positions I have now. This is the portfolio I start. Pretty much I will start the year 2023. Let me know in the comment section below, what do you think of these positions? I would really like to hear your feedback. Do you think some companies are maybe similar you own, or are some of these companies, do you see big risks in these companies and think that my decision to invest in them has been the wrong one? Really would like to hear your opinions. As always, anything said in my channel, these are only my opinions, no financial advice to anyone, obviously. Me just telling my opinions about investing, about stocks. But now I would like to hear your opinions too in the comment section below. So please do comment. If you haven't subscribed the channel, do so. And you will see if I will make any changes next year when the year starts, 2023, in my portfolio. Subscribe to the channel and you won't miss it. Thank you for watching this video. See you in the next video. Bye bye.